Is your 401k a terrible investment? Should you invest on Kalshi and Polymarket? And is Elon Musk cash poor? Let's find out. Welcome back to the Personal Finance Club show. Hey, Jen.
Jeremy, what's up?
I have a big story. Well, it's kind of a big story and kind of a tiny story. But about a week and a half ago, I learned that my family lost our most valuable possession, which is a teddy bear that belongs to our 5-year-old son, Mateo. And it's a bear he's had and loved his whole life, has traveled with us on vacations, has been in all of our family photos. There's literally a photo hanging, a baby teddy hanging on Mateo's wall. And we, like a week and a half ago, we think that on a 6-mile bike ride through like downtown San Diego, that baby teddy fell off the bike somehow. And I love baby teddy, don't get me wrong, but my wife like crazy loves baby teddy, and Mateo crazy loves baby teddy. My wife crazy loves Mateo, as do I, of course. But like, you know, mama just like cannot bear to see her baby without his teddy bear. And so, you know, my instinct is like, this bear is gone forever. How do you find a bear? You know, we obviously, you know, we walked the whole area, you know, because the bike ride was to a playground. I originally thought maybe he like left it at the playground, but then we were like pretty sure that it actually fell off the bike. And so we like walked the entire, you know, or drove the entire path. The bear is nowhere. And so then Andrea's like, let's make signs. And so I make a little sign in Photoshop, and I order 50 copies from Kinko's, and she comes up like 15 minutes later. She's like, where are the signs? It's like, it takes a minute. Like Kinko's takes like, you know, 4 hours to make the signs or whatever. And she's like, no, just use our printer at home. And I was like, the printer doesn't have color, but so she's like, print them. I'm like, okay. And so we print 50 signs at home, and then another 50 coming soon in color from Kinko's. And then, you know, she and Mateo take like a red crayon. The bear, by the way, is brown with red overalls. And so she and Mateo take like red crayons and like start coloring in the overalls. And then, you know, I stay home with baby Ty, and then those two go off and go to the playground and go to the path and just start posting signs everywhere, like lost bear. And then we put a reward on the bear, and you've already seen the video, so that you already know this story. But
the emotional story.
But Andrea wants to put, you know, like $1,000 or $5,000 reward. She's like, I'll pay anything to get this bear back. And I'm like, if you put a lost teddy bear sign with $1,000 reward, people are going to think it's like a joke, or you're going to be an insane person. You're not going to get serious replies. You're going to get like con artists, or people aren't going to take it seriously. I was like, what about $100? Like, I think that's like a very big reward that someone would, you know, turn in a teddy bear for. And so we agree on $500. So all these signs say reward $500 for a teddy bear. And, you know, also she quickly admits she would trade her car to get this bear back. So like the price she'd be willing to pay if given the opportunity would have been crazy. And then we start posting on like Facebook and Reddit, and, you know, the neighborhood apps and Ring apps and things like that. And, you know, days start going by, and, you know, we're losing hope. And suddenly like a lead comes in, which is someone on Facebook says, I remember driving down this road where we think the bear was dropped and seeing the teddy bear on the side. And I even considered stopping to pick it up. But why would you do that? Because it's like a very like distinct red overalls teddy bear that looks very weird laying on the road, right? And so she gave like a very accurate example or explanation of where it is. She's like, it was on North Harbor Drive going east across the airport, like 200 yards past the, you know, the parking lot. I'm like, that is an incredibly accurate. So like, as soon as we get that, I get in my car, I drive over there. I'm like walking and jogging. You know, I'm both looking for the bear and posting signs around that area. And, you know, can't find him, come back. Then, you know, the next day I get a text that says, hey, call me ASAP. My girlfriend has your bear. She picked it up yesterday on the road, right where we were looking. It's in her trunk. She's at work. And I'm like, oh my gosh, you know, he like gives all the details. It's like a perfect match. I was like, oh my gosh, that's it. That's totally it. You 100% have it. You know, can you send me a picture of it? And he's like, oh, she's at work. She's going to send it as soon as she can. And then he texts me a pic, and it's like, it is the same brand as Baby Teddy, but it's like cut out like on like a
Terrible,
transparent
evil
background
person.
for some reason. I know. I'm like, what is this? Like, why would you even say that? No one takes a picture like that. That's like a photo, like a hack Photoshop job. I'm like, what is this? And then I was like, oh, that's not. I was like, can you take a picture of the back? And like on the back of his head, there's like a little burn mark where I like left him by a fireplace. So he's like unmistakable from another bear of that brand. And so it's like, can you take a picture of the back? And he sends me the same thing. Some like ghetto Photoshop version. And I was like, no, I don't think that's the bear. And then, I texted him a couple more times. I was like, just asking these kind of like open-ended questions, and then he never responds again. I was like, okay, this is just a scammer who is, I don't know what his plan was though, to be like, for me to be like, hey, okay, I'm on my way over, have this exact same replica bear, because the bear's from the 80s, by the way. This is not even like a currently sold bear. This was, I don't think I even said that on the, like on the Instagram story, but this was like Andrea's bear when she was a kid. So this bear has like,
no, you should have said that.
I know I should. I forgot that part. So this and it was a very popular bear back then. So like there's still scatterings of them on eBay and Etsy and things like that. But still they're getting increasingly difficult to replace. So yeah. So now it's like a week later. This bear has been lost for a week. We've combed the area, signs, internet, yada yada yada. And Andrea's like, I think hope is lost. Let's just take the signs down. Then my phone rings, maybe not in that exact order, but approximately. My phone rings, and the guy who sounds very incredulous, he's like, are you looking for a bear? I'm like, yeah. He's like, I think I picked it up when I was on a bike ride. I was like, and at this point, I'm a little bit, what I left out is, I've probably gotten a dozen phone calls, a lot of them from like giggling sorority girls, be like, are you looking for a bear? Okay, we'll look. Is this real? Is this a scam? Because just people see these signs on the street, they think it's so funny or so silly or whatever. And some other scammers like, oh yeah, have your bear, and then they hang up on me. I'm like, oh, did I call back? They're like, yeah, we got disconnected. I have your bear, and then they hang up. They're just like, they're just trolling me, right? So I'm a little bit, at this point when I answer these phone calls, I'm a little bit skeptical myself. And he's like, yeah, I think I have your bear. I was like, where'd you get it? He's like, oh, by the, Zion Pizza, someplace I didn't know. I was like, okay. I was like, well, okay. That's great. That's amazing. Can you like send me a picture? And then sure enough, he texts a picture and like, it's Baby Teddy. And I was like, can you send me a picture of the back? And he sends me a picture of the back, and he zooms in. So it's just the back of the body part, the back, not the entire back of the entire bear. And so I can't see his head. But I'm like, this has gotta be him. And so I'm like, dude, like, let me come get this bear. I'll bring the reward. Let's do it. And he's at a bar. So he's like, okay, I'm going to this bar. I'll bring the bear with me. So I go and meet him at this bar, and sure enough, he has Baby Teddy, like against all odds. He said he was driving, or he was riding his bike back from a different bar a week earlier, it was the previous weekend, and he saw the bear on the ground. He picked it up and took it home. And I guess the way he found the flyer was his girlfriend came to his house, and she's like, why do you have a teddy bear? And he's like, oh, I found it on the ground. And she thought that like another girl had brought it over, and he's like, no, I found it. And then she was like kind of mad at him or suspicious of his story, I guess. I mean, and actually the story gets crazier, by the way. And then, a couple days later, I guess her friend texts her a picture of this lost sign. I'm not sure if they had talked about it or if they just thought it was funny. So then she texted to him, and she's like, oh, I'm sorry. Like, I think your story checks out. I think someone's looking for this bear. And so that's how he got the flyer. And it's one of the flyers like Mateo and Andrea actually colored in and taped to the side of the, one of the like, electrical boxes along the road or something. And so that's how he called me. And so then I made a little video about it, posted to Instagram. And then someone DM'd me on Instagram and said, hey, I'm the girlfriend. I've been following you for years. And until this is breaking news. I didn't even share that, on Instagram, but, she's like, I've been following you for years, And only when I was randomly scrolling and the same stupid bear popped up did it click that like this person I know from being like a Z-list Instagram influencer was the person posting the flyers for the lost bear. So crazy story, but we got the bear back. Oh, people always wonder if he took the reward. And, I was like, let me give you the reward. He said, no, it's okay. And I was like, well, yeah, here's $100 cash. I slept on the table because I didn't have $500 cash in me. I want to give you the rest, but if you refuse, I'm going to just donate it to a charity of your choice. And he says, well, I don't really have a charity of choice. I'm like, okay, pull out your Venmo. He's like, and then he said, I'll buy a round for the bar. I'm like, great, whatever, pay your rent, burn it, whatever you want. But for my conscience, I don't want to be posting these flyers and not owning up to like paying out the reward. He got the reward. And I don't know. It's just, I feel like the real story here is, a mother's will. Andrea, I'm a very determined person. I would, we lost an e-bike to a thief about a year ago or 6 months ago or something, and I went to crazy lengths to try to find it. But Andrea would not be denied, and she got it. So good for her.
Incredible. It feels like a sitcom episode, like Full House or something.
Yeah. As an aside, I posted to Reddit. I was like, lost bear, just random. Once she got really serious, I was like, okay, I'll go to my corner of the internet and see if I can help. And it's just such a silly sign. It's like this bear with red overalls that says, lost bear, $500 reward. And so it actually was doing well on Reddit. So a lot of people were commenting and saying, I hope you find them, which was really like, people were being super nice. A lot of people were saying, hey, I found a similar one on eBay, and we probably have 5 baby teddies at this point. Grandma bought one. We've got 2 backups. We have other baby teddies, but there's only one original. And so, but people were being really nice. And so then, just like yesterday or 2 days ago, I went back and posted an update to Reddit and said, hey, update, the bear's been found. It's kind of a cute little story. And I linked to the video that I made on the Instagram. It was like if you want to see the more context of who found it and stuff, I like put all the text there, but I was like, if you want to see more context of the video, here it is. And so I posted to 2 subreddits. On one of them, everyone's like, yay, hooray, like what a cute story. I'm so glad Mateo got his bear back. So cute. And the other one, it started like that. But then one guy was like, I'm glad you got your bear back, but is this just some like fake story to sell your scam investing course or something? And I'm like, I responded, I was like, no, it's real. I don't, you don't need to look at the link. I'll take down the link. I don't care. I'm not trying to I'm not going to sell any courses from this, this bear being lost. But then like everyone on that other subreddit was like, you liar, this is all a lie. I knew it was fake. No one holds on to a bear for a week. And they're just like insulting me and yelling at me. And I was like, it's really gets to me. I'm like, am I a liar? I'm like, no, it happened. I was like, what? I'm like, I have the receipt from Kinko's ordering the flyers. I've got the Venmo I can like prove it. I have proof, this happened. My wife woke up mad every day for a week. And then I wanted to kind of make the case for Personal Finance Club. I was like, no, this is like a passion project I've been doing for 6 years. I did it for free for years because it's just teaching the basics of personal finance, live below your means, invest early and often, index funds, minimize fees. It's like the things that it's not a day trading course. And I get that, or not even a day trading course. It's not a day trading, account or brand or whatever. And I get that people see like investing on Instagram, they think you're a scammer. Because there's so many are, and we're swimming with sharks, I know, but I wanted to make the case. And, on Reddit, everyone's so cynical and angry. There's just no chance, but I'll do it here instead to you, Jen, and to our loyal listeners. But yeah, I did Personal Finance Club for free for years. People would ask me the same question over and over and over, which is like, okay, which index funds do I buy? Or how do I open a Roth IRA? Or what's the difference between Roth and traditional? And I always wanted to just do a brain dump from my head into their head and say, oh, it's really not that hard. I can show you, I can click the buttons. And so during COVID, when I was bored, I made a video course. I was like, all right, I'm just going to throw this all in a video course, A through Z, step by step. How do you actually, build wealth by investing in index funds, the low fee way, not getting scammed by day trading or insurance salesmen or whatever it is. Just lay it all out. I was going to post it for free, but then I was like, oh, I've kind of been losing money on this passion project of mine because I'm, paying for website and hosting and conferences and things like that. And also people don't really value free. So I was like, maybe I'll just charge like, $50 or $100 for it or something. And that's how this paid course came about. And it's been wildly successful. I think like 20,000 people have bought the course. It's got like a 4.97 review on Trustpilot. People really love the course. And I bring that up now because we're having a sale starting when, Jen?
On Monday, July 13th.
So if you're someone who's been listening to the podcast, or you're new to the podcast, or you have a friend who you think would benefit from this like A to Z, best practices of investing, or our other course, how to money like a millionaire, which is about debt and credit cards and insurance and taxes and basically how to run your own personal finance life. It's going on sale. The courses are normally $100 each, but they're going to be something cheaper, which is, I don't think we've even figured it out yet, but they're going to be $69 each, or both for like $119 or something. And so you can save about half off, or 40% off or whatever it is, if you buy the courses. So yeah, go check it out at personalfinanceclub.com. And so I guess maybe I just proved that mean guy in Reddit right, because I did just segue that baby teddy story into selling courses.
Yeah, he kind of proved his point.
The irony is killing me. But in my defense, it was never planned. We really did lose baby Teddy, and we were going to have this course sale anyway. And we have course sales. I think this is the first time we've ever mentioned it on the podcast, by way of, saying how rare they are, because we rarely have sales. And so, there you go. There's a sale starting if you want. And if you just want to listen to free, like I always say, 99% of what we do is just creating free content to help people learn. That's great. That's why I'm doing it, because I love the mission. I love the, I love the purpose, and the course sales just help, pay for some of our expenses. Because we don't do sponsorships, by the way. Have you ever heard an ad in this podcast? No, we don't do sponsorships because we don't want to be pushing crappy products. This is the only way we can make money in what we think it is an unbiased way.
You're doing great. Should we get into it?
Thanks, Jen. I know that was a long story, but if you liked the baby tie story on Instagram, that was only, 2 minutes long. So this one is the longer version with some added fun facts, like the girlfriend who is the key to the whole thing actually follows us on Instagram. What a small world.
So funny.
Yeah.
All right, let's get into our segments. Scroll Patrol.
Scroll Patrol.
All right, we've got a video from the internet. Jeremy has not seen this video. We're going to watch it in real time. He's going to give it a score. Let's click on that link and let me know what you think.
All right, I have not seen this video before.
I think putting money into your 401k might be the single worst financial decision you are making. Vanguard, one of the world's largest retirement managers on earth, published this How America Saves report. Look at this. The median 401k balance for Americans aged 55 to 64 is $87,571 after a lifetime of contributions. So what actually builds wealth? Because that sure ain't it. According to this survey, self-employed business owner families have a median net worth 4 times higher than families who only earn wages. But what does that mean? You can be the most consistent saver in your whole office and still retire broke if you're putting money into somebody else's assets instead of buying your own. Sounds like almost too obvious. So why isn't everyone doing this? Because nobody taught you that buying a business was an option. Here's another secret. Your 401k, you can actually use it to buy a business. Ownership builds your business. Most people who invest in retirement funds, they fund somebody else's business. Let's make money for you instead of your fund manager.
I mean, any video that starts with 401k is a scam and the worst decision you can make is is investing in your 401k. I'm going to have a massive problem with it. That's it. I know this creator. I don't think I've ever talked to her, but I've seen her stuff, and like we have friends in common. And my friends we have in common have sent me her stuff before. They're like, is she right? And it's one of these things, like, her point of this video is entrepreneurship is powerful. And I think her whole shtick is like, go buy a business and, do that. And, maybe, I'm a huge fan of entrepreneurship. I actually like starting companies rather than buying companies. But, I think that part of the video has merit, but her investing part is just so off base. And so she quotes this Vanguard stat that says the median 401k balance is $80,000. And then she kind of adds in this little line after a lifetime of investing, but that's not true, because you can have 10 different 401ks. And in fact, the median amount of time employees stay at a job these days, I think, is like 2 years. And so in a 40-year career, you might have, what would that be, 20 different jobs? And you might have 20 different 401ks. And if you had 80,000 in each of them, as Vanguard said, your median balance was 80,000 times your 20 different 401ks, you'd be doing great. What is that? $1.6 million. That sounds more like what you would be at after a lifetime of investing, even if at a moderate 401k contribution. And so this idea that you're going to just slave away for decades plowing money into your 401k and then end up with only $80,000 isn't true. And of course, there's all sorts of specifics built into this median 401k balance. Did you roll over from an old 401k? Did you roll out into an IRA? How long have you been at the company? How old are you? Yada, yada, yada. And I think she did say that there's, for people who are, 55 to, or whatever, there's an older age range, but still, that doesn't mean that they've worked there for 40 years. These days, rarely do you end your career at the same place you started. Like my parents' generation, who are there in their 70s, that was more common. These days, it's extremely uncommon. And so, yeah, I just, it's kind of the problem of social media, which is she's trying to make this dramatic point. The worst thing you can do is invest in a 401k. And she's trying to do that to buoy her other point, which is, hey, business owners often do well, which I agree with. If you look at the richest people on earth, they all either started businesses or inherited, businesses from someone who started it, right? It's the Elon Musks, Jeff Bezos, Mark Zuckerberg, Larry Page, these are all tech giants, but, even on a smaller scale, for sure, the rich people in your city probably are people who own businesses. And so I think that's a great thing to do. I've ran my career owning businesses, but it's not like I don't invest. That would be reckless. If the only thing I owned, so, the company that I'm growing now is Nectarine at hellonectarine.com, of course. And if the only thing I owned was Nectarine, I would be in horrific financial shape, because Nectarine is not paying me a salary. I've earned zero from Nectarine, and Nectarine is a startup, and we're trying to grow a business. We're trying to reinvest our profits. And so my general wealth building strategy is to, have this these dual thrusters of the rocket ship. On one side, I'm growing businesses, and the other side, as those businesses kick off cash or get acquired or have liquidity events or whatever, I'm investing that in my 401k and index funds, Roth IRA, brokerage account, whatever it is, just plowing money into my investments. And so that gives me in this very comfortable financial situation I'm currently in, which is I can start my next business with, and she even kind of references that. She's like, you can go use her 401k to buy a business. I said, hey, wait a minute. I thought I was contributing to a 401k for my entire career and I had only 80 grand, but somehow I'm going to use that money to buy a business earlier in my career. So it's like, that's a huge contradiction there. And because she knows the reality is 401ks often have large quantities of money. Many people are 401k millionaires from investing in their 401ks over time and, aggregating them in IRAs after rollovers and things like that. So yeah, and I think a lot of her content's very good, and I kind of have some sympathy for creators who are trying to make a point and trying to have that clever hook at the beginning to get people to watch. And to her credit, here we are on the Personal Finance Club show who are sharing her video because of the hook. But I can't endorse this as a strategy. I think it's a terrible strategy. I think if you're going to be a business owner, great, but you should still be contributing to your 401k, and you should still be investing in index funds. So I give this video a D+. I think much of our other content is better, but I just, you can't come on the Personal Finance Club show and say investing in the 401k is the worst decision and expect to get anything above a D. The D+ was generous, to be honest.
D+. Ouch. Okay.
Did you think I was going to give that a good grade,
reasons. Jen? I didn't, but I just, D+, just that hurts. Okay. Well, let's move on to our next hot topic.
What's our hot topic today?
Okay, so somehow we have not touched on this hot topic just yet. What are your thoughts on prediction markets like Kalshi and Polymarket and the strange things that people are betting on lately?
Have you ever gambled on a prediction market, Jen?
I haven't. Have you?
Yeah, I was doing it before the days of Polymarket, and I used one called predictit.org.
What?
Which was like, I know, I actually kind of feel bad for them because I feel like they were trying to do everything right and maybe going through the regulatory hoops or whatever, but just they were not popular. And I just think the Kalshis and Polymarkets, I think just those two have just crushed them in terms of popularity, because I see like Predicted, I feel like was kind of like the OG, and Kalshi and Polymarket just are crushing them in terms of market share now from my perspective. But let's talk about what they are first.
Marketing is crazy.
The marketing is crazy. It is it's almost like AI, where there's just so much money there that they're plowing money into ads or whatever. So yeah, let's talk about what they are. So if there's a presidential poll, so there's going to be a presidential election in 2028, in 2 years from now, 2.5 years. And pollsters could get on the phone and try to call 1,000 random, citizens of the U.S., or maybe even more specific, like Iowa, and use all of their best statistical, systems to get a really fair poll of voters. And then you'll see these polls reported in the news. And so it'll be something like, hey, in the next election, 51% of people favor J.D. Vance and 49% of people favor Gavin Newsom if they were to run against each other. And so, your takeaway from that might be, oh, okay, it's about a coin flip. It's very close. It's within the margin of error. We just don't know who's going to win. And that's just a pollster's take on predicting what's going to happen with the election. A prediction market says, okay, forget polling, just let gamblers bet on what they think is going to happen. And so, take it back to Trump's first victory, or even his second victory, when it was Kamala versus Trump. I think the polls are very close. Everyone kind of assumed Kamala was going to win the popular vote and Trump was going to win the electoral college, or it is going to be kind of like come down to a few key states. And you watch CNN or you watch Fox News or MSNBC or whatever you're watching, and it just feels very close. But if a week before the election you looked at Polymarket, it had Trump at like 92%. And so, here's a screenshot I'll show on the screen right now, which is basically letting gamblers bet on who they think is going to be the next president of the United States. And you can, for each person or each like item in this, what do they call these things? These like markets. For each option in the market, you can either buy yes or buy no. And so, for example, JD Vance, you can buy yes for 20 cents. And they're kind of shares just like in the stock market. And so, for example, I could go buy 100 shares of JD Vance for 20 cents each, and that would cost me $20. And then if he wins, if it comes true, they'll eventually, the market will resolve and I would get $100. So I would turn $20 into $100. And so if I was sure JD Vance was going to be the next president, I could get a 5x return on my money in the next, 2.5 years. That's pretty incredible. Not only that, just like stocks, I can trade them. And so I could buy JD Vance at 20 cents, sell them at 30 cents, get a 50% positive return on my investment, and go on my day. And, it turns out that these prediction markets are pretty scary accurate. While the polls before the 2024 election were kind of showing things were about equal, the prediction markets were saying, no, everyone who's betting on it, or at least 92% of people, are betting that it's going to be Trump. And, spoiler alert, Trump won in 2024. And, so the case for these prediction markets being a good thing it's the most accurate forecasting tool ever created. And you can literally make markets for anything. I've been talking about politics, but you can make markets for, is it going to rain in San Diego in the month of July or whatever? And people can bet on it. And the case for these markets is saying, hey, weather predictions are important to people for planning weddings or knowing if they're going to need to water their crops because they're farmers, or predicting traffic if you're doing logistics, whatever it is, weather's important, sailing, whatever, and weathermen go on local news and say, oh, it's going to be sunny on Saturday. And they have no incentive to be right. And they have no penalty if they're wrong. Mm-hmm. And so the weatherman, just like the political pollsters, it's just cheap talk. CNN's incentive is probably to make you think it's on the edge of a knife to keep you watching the entire election, right? I don't really know the 24-hour news business very well, but they certainly don't get a penalty if they're wrong. They probably have some sort of journalistic integrity and are trying to report things accurately. Whereas gamblers, if they guess wrong, they lose all their money. And that creates this much more accurate predicting tool. I think that the government has basically agreed that accurate forecasting tools for many things are good for society. If you can predict traffic, if you can predict weather, if you can predict natural disasters, if you can predict fires, whatever it is, society benefits from that in various ways. All right. That's all the good news.
Uh-oh.
and that's the end of the good news. By the way, when I gambled on this old prediction market, I think I put a total of $20 or $30 in, money that I was just playing and losing. And I did very poorly. I think I bet on Pete Buttigieg being like president or vice president or something, and he wasn't. I think I bet on Trump losing, and he didn't. I guess he did lose one of the three. So maybe I won that one. I don't know. And, studies have looked at that and said, okay, who, is this a coin flip? Are half the people winning, half the people losing? And basically all the studies I could find, and these are still relatively young. And so there's not like massive amounts of research. And there's also, these companies are kind of like skirting a lot of regulatory restrictions and aren't always transparent. And so, there's a little bit of haze to try to see through. But all the credible sources I could find said the following. Over 70% of traders on Kalshi have been unprofitable in the last 6 months, according to data the company shared with CNBC, saying, hey, it's not 50-50. Most people are losing money. So that's a bad start. It gets worse. Another study said the top 1% of users capture 76% of the profits. And yet another study said the top 0.1% of users capture 67% of the profits. And so if there is 1,000 people in the room, one guy is getting 67% of the profits, 10 guys are getting 75% of the profits, including the one guy. And then then the next 30% are getting the rest. And then the 700 people are losing money. And, would you want to walk into that room and see if you're the one? I wouldn't, probably going to be one of the 700 who's losing money, as I was when I did it, right? And so this isn't really a fair game. And also, when you buy a stock in the stock market, everyone can win. Stocks go up because the companies profit and pay dividends and go up in value and become more efficient and innovate and things like that. The stock market gets more valuable every year on average. But with prediction markets, everyone loses because the prediction markets, I forget, they have different business models. I think some take a cut, some make money other ways, whatever it is. But at best, the alpha is zero, meaning on average, no one makes money. Some win, some lose. It's just a seesaw. Unlike the stock market, where the rising tide raises all ships. So the case against these is that, one, it's just gambling, same as sports gambling, same as Vegas, same as whatever. And gambling in the U.S. is pretty tightly regulated for starters, and is flat out illegal in many places. You can't go to most cities and go to a casino and play. Certain cities have casinos, Native American reservations, Nevada's got loose restrictions, but yeah, it's very tightly regulated, oftentimes illegal, because I think society generally agrees that gambling's bad for society. So that's the case against. Another case against is essentially market manipulation or insider trading. When I see that 0.1% of accounts are making 67% of the profits, I don't think, oh, wow, what a smart trader. Maybe some of them are, but what I really think is, oh, it must be insider information. So, for example, there was, I think it was the guy named Maduro, who is the president or the leader of Venezuela.
Yeah.
There was a market that said, is he going to be in power at the end of the year? And then a day before, and and the no side was at like 20%. So if you're betting on no, I'm making up these numbers, but something like that. So basically, everyone thought it was very likely that Maduro would still be in power at the end of the year because he's been in power for decades, and why would it change this year? But then 2 days before the raid, where the U.S. government went in and plucked him out of there and, took him back and put him on trial or whatever's happening with him, some guy bet like $100,000 that the answer would be no. And then he won like $500,000. He 5x'd his money, won $500,000. And then he took the money out, closed his account, tried to cover his steps, covers, all traces of his steps. And then, months later, it came out that, that dude was on the mission to capture Maduro. And he knew God. He was like an American soldier. He knew what was about to happen, and he thought he could just go quick 5x his money, and he did until he got caught. And even now, like, did he break a law? Is it, and apparently he did, because I think he's on trial and for wire fraud or whatever they're going to get him on, because this is so loosely regulated. And so the point is, all the people who sold him those shares at 20 cents who were trying to get their money out kind of got scammed, right? Because had he not bought their shares, he would have had the shares, and then they would have had the 5x return. And that's that's like the penalty of insider trading, is that if you're an honest person without that information trading on these markets, then you're going to lose money. You're going to be one of the 700 losing money, paying into the 0.1% of people who make all the money because they've got some information. And then the worst case against these prediction markets is they're a moral hazard. So for example, that same market, is Maduro going to be in power at the end of the year? Someone could kill him. Someone could go, bet $100,000. The answer is no. Yeah. Go kill him and make $500,000, or do it. Why not $1 million? Why not 10? Whatever the market can afford, as many shares as people will sell you, and, maybe you think he's a bad guy and politicians are assassination targets, but like, what if it's something else more instant? Another one that was a market was, will the LA Palisades fire be under control by June 1st? You are in LA, Jen, you remember the fires. And someone could say, no, they're not going to be in control, and go start a forest fire, right? Oh my God. That's terrifying, because is someone out there willing to start a forest fire for $500,000? LA's got, what, 15 million people or 20 million people there? Probably someone is. Probably some, psychotic, like depraved individual who doesn't understand the deaths and the toll it could cost, would go start a fire. And so it creates these terrifying incentives for people to both manipulate the market themselves by starting a fire and, at worst, killing lots of people to make the market go the way they want, And so these things are, we're living in a weird time. This is, and I think different governments and different presidential administrations will probably look upon these differently. And my reading of the Trump administration is that they like stuff like this. They don't mind chaos. They like lack of regulation. They don't mind, Game of Thrones. And if you have a dragon and laying waste to cities, just fine with you, just fine because you have a dragon. Why regulate that market? I think that they probably feel that way about this, whereas the next administration maybe won't feel that way. Who knows? And so that's kind of what it is. That's how I feel about it. I personally don't have any faith that I could gamble on these markets and win. And to that point, this is absolutely not investing. It might say shares. It might feel like you're buying something. It is not investing. It's 100% gambling. It's purely gambling. And it's probably at least as bad as gambling at Vegas because it's not regulated. And so people are manipulating the markets and taking advantage of you without knowing it. And so, if you, that said, like I still look at these sites not that often, like maybe once a week or something, because I do think that they are really amazing prediction tools. If I want to know who's actually likely to win, president in 2028 is still far off. But if I'm, looking at who I think is going to take control of the House and Senate in 2026, I think Polymarket's probably got a better answer than any news organization right now. Sadly, I think news organizations are also like integrating this into their tickers and things like that. But it's still 100% gambling. Actually, there's another screenshot I wanted to show that this is a Bitcoin market where it says, will Bitcoin be up or down in the next 5 minutes? It's like the most hilarious non-investment I can imagine. It's not buying Bitcoin for years and you're making some sort of long-term guess on, crypto as an asset or inflation hedging or whatever people are arguing for Bitcoin. It's literally just market manipulation gambling, and it's live. I'm showing like a screenshot here, but it actually updates in real time where you can see the line bouncing around. You can see the price going. It's just 100% the same, feedback loop that Vegas relies on with the lights and the wins and the losses and the endorphin highs. And so it's 100% gambling. It's not investing. Do not do this with your money. If you want to go play with $20 or whatever, because it's entertaining, fine. If you think you might have a gambling problem, don't touch it. Just like a drinking problem, like don't just do one shot of vodka if you can't, stop. And otherwise, I still think it's kind of interesting to look at.
I have a question though, because if what you're saying is true, that the prediction markets are generally pretty accurate, but most people are losing, meaning they're on the wrong side of the poll, how are the polls so accurate? Or is that just like speak to the statistics of gambling? Like, I don't understand how both things can be true.
I think it's true because the winners are betting bigger. So in that Maduro thing, he knew he was going to be right. So he bet 100,000. 100 people all bet 1,000 and lost. And or whatever it is. Maybe it had to be 5 because he won 500,000. So, 500 people all bet 1,000 and lost. And therefore he won 100 different people's $5,000. And so you had one winner, 500 losers. They both cumulatively put in $500,000 each, but he got all the money. And so that's how all the profits are flowing to very few people, because they're getting these bigger wins, either by betting when the price is lower or by betting more. And then all the sheep like me and you are just taking our best swing at it and, losing usually. One other funny story I remember about this is I think it was like a 60 Minutes piece on these prediction markets, and they talked to one of these guys who was one of the, more winning people. And, he certainly said he wasn't doing any insider trading, but one of the things he did was in the 2024 election, he bet on the vice presidential nominee for Trump. And it was like, remember, it was like Vivek Ramaswamy. It was, I forget all the other ones. Ron DeSantis, the whole like list of the Republican like guard or the likely suspects were all on the list. And when he went in, he looked at the whole list, and then he bet on JD Vance, who was at like 4 cents. So he could win $1 by betting 4 cents. And he said the reason he bet on JD Vance was he was reading every news article he could find on how Trump picked Pence. And in one little news article, one little aside, Trump said, I liked Pence because his name's 5 letters and my name's 5 letters. And so it looks good on a rectangular sign. And I don't know who's listening to this, but to my ears, that sounds like exactly how Donald Trump thinks. He thinks all about marketing, all about perception, all about, looking good, not about substance or finding the best expert. And so this guy, this trader, is like, yeah, he's like, that sounds like what Trump's going to do. And so Vance and Pence are both 5 letters, and they even have the last 3 letters. So it kind of keeps his same brand alive, essentially. And so he bet when no one thought JD Vance was good. And so now, by the way, JD Vance is leading the prediction market for who will be our next president. And that probably goes back to the fact that his last name has 5 letters in it and sounds like Pence. This is America.
Mundia. Okay, I'm in the clear.
I do not think you or I were on Trump's short list for vice president.
Schneider's definitely not getting it.
I know, yeah. Good luck, Vivek Ramaswamy. You're never going to...
For many reasons.
You got to change your last name to Vivek Smith. Then maybe you'll be in Trump's good graces.
Oh my God. Okay, amazing. Great breakdown. Let's move on to, do you want to have your question answered on the show? Go to personalfinanceclub.com/ask. Can I ask a dumb one?
You're asking smart questions to a dumb guy, and we have a really smart question today.
We have an audio question. I'm so excited. Let's listen together.
Hey guys, this is Alyssa from North Carolina. I was hoping you could talk a little bit about how to reduce the cost of healthcare when retiring early. I've heard you need to keep your income above a certain amount in order to avoid Medicaid, but you can also qualify for a premium tax credit by being below a certain income level. How do you manipulate your income if you're just living off your investments every year? Thanks.
What a great question, Alyssa. Alyssa. And she's from North Carolina. Where are you from,
I know,
Jen?
I tried to email her and ask her where, because I was so curious, but she didn't email me back yet, so hopefully I find out eventually.
I'm not quite sure.
And I have family in North Carolina too, so we all have North Carolina roots. Thank you for the audio question, Alyssa. So it's a good question. And basically, generally speaking, when people retire early, they often lose their company-sponsored health insurance. And so if you're working for a big company, they usually provide you either free or greatly subsidized health insurance. So maybe you only pay like $100 a month for your health insurance. And a lot of people get very, very concerned, rightfully so, because this is America and health insurance is crazy, that if they retire too early and they don't have access to Medicare, then they won't be able to afford to live, or they won't be able to afford their insurance. And so that's what Alyssa's asking, which is, hey, if I'm going to go buy health insurance, how do I keep it affordable? And it's kind of a complex problem, to be honest. I'm going to try to keep it relatively simple. So basically, any publicly subsidized healthcare you qualify for is based on your modified adjusted gross income, the MAGI. It's like the same thing that they use to figure out your Roth IRA eligibility. And so it's basically like, how much money do you make in a year? If that number falls below 138% of the federal poverty level, you're legally ineligible for ACA premium subsidies. So what that means is the poverty level in 2026 is $15,960 for an individual and $33,000 for a family of 4. 138% of that is about $22,000 for an individual or $45,000 for a family. And so if your modified adjusted gross income is less than $22,000 as an individual or less than $45,000 as a family, that means when you go to healthcare.gov and click sign up for a plan, they're going to say, hey, you don't qualify for subsidies for a health insurance plan. You have to go the Medicare or the Medicaid route. That gets even more complex if you live in one of the few states, I think it's like Georgia, Texas, and some other red states that don't allow expanded access to Medicaid. And if you make below 100% of that, of the federal poverty level, then you don't get anything. And you literally just have one of these health insurance gaps. It's like pretty terrifying, actually. So basically, and, on one hand, you said if you qualify for Medicaid, then you could take it. You can still go see American doctors and you can, maybe even keep your same doctor. I think the reason people might want to avoid Medicaid is because there are fewer providers or more different provider networks, potentially longer waits sometimes. But I think generally in the US, Medicare and Medicaid are well funded and generally good programs. If you don't think so and don't want to be in Medicaid, that's fine. But all you got to do is have your modified adjusted gross income be above $22,000 a year. By the way, if you have a $1 million portfolio, that's going to kick off about $20,000 in dividends by itself. And so it's pretty unlikely that you can retire well before 59 and a half and still have such a low income just from your investments alone that you would be qualifying for Medicaid. So I think that's probably not a real, risk for most people. And I get a lot of questions like this, these concerns about early retirement. If Alyssa was on this call, I would ask her, are you currently facing this or are you concerned about this? And I think even by the way she phrased it, it sounded like she was concerned about that in the future. But I never, ever hear from people who have this actual problem. The reality is, once you get to a level where you can retire early, this stuff kind of fades into the details and you can just go buy health insurance or whatever it is. So that said, I'll continue on with my answer, which is if you're above that 138% level, you actually start qualifying for medical, for the Affordable Care Act subsidies. And like the sweet spot is between 138% and 250%, which is as an individual, 22,000 to 40,000, or as a family, 45,000 to 82,000. So if you're in those ranges, you would basically get really reduced cost of healthcare. And so that's kind of what Alyssa's asking, which is like, how do I get my income to be that level if I don't have a job? And there are some ways. If you want to, let's say you're below that amount and you're worried about being on Medicaid and you want to increase your income, here's some options. You can do Roth conversions. That's kind of the big one. So let's say you've been putting money into a 401k and now it's all in a traditional IRA. You can convert some of the money from traditional to Roth. When you do that, that counts as income. You're paying income tax on that. That adds to your modified adjusted gross income. And you can do that for any amount you want. You can convert $1 from traditional to Roth or 10,000 or 10,300 or whatever it is. And so that's like one really big lever you have to pull to basically make your income whatever you want, assuming you have money in traditional retirement accounts. Also, in a brokerage account, if you have a lot of money in a brokerage account, dividends or realized capital gains also count. So like I said, if you have $1 million in a brokerage account, $20,000 a year right there is going to count towards your modified adjusted gross income. You can always sell things at a large gain. If you have investments from very early on and you want to increase your income, you could sell them, pay the tax on those gains, and add that to your modified adjusted gross income. There's also tax rules called the Rule 55 or 72T, which basically say if you're 55, you can take money out of your most recent 401k and pay the tax on it with no penalty. Or 72T says you can actually just start pulling money directly from your retirement accounts without any sort of penalty. So basically, there's lots of ways to increase your modified adjusted gross income. If you're trying to decrease it to pay as little, basically pretend like you have as little income as possible to qualify for these subsidies. You can pull primarily from cash or savings without selling anything. If you have a cash position in a high yield savings account, checking account, or a brokerage account, you can just spend that money without selling anything. Or you can sell assets that have the smallest gain. So like, let's say you've been investing for 20 years and there's a group of your investments that have a very small gain. When you go to click sell, it lets you choose which tax lots you want to sell. And you can sell the ones that have no gain to basically get some of that money out of your brokerage account without paying tax on it. And you can also pull from the Roth portion of or the contribution portion of your Roth account. And so these are all ways to basically not add to your, I won't say reduce, but not add to your modified adjusted gross income. At some point, you can't keep reducing. The government wants to charge you taxes, and they're going to. Sometimes people say, hey, Jeremy, I have $500,000 in income. How do I, drop that way down? And the answer that almost everyone will give you is you just got to pay tax on that. There's some things like you can contribute to a 401k, things like that. And if you're in a specific tax situation, we're definitely getting into the weeds enough where you're like, okay, it's probably time to head to Nectarine and get a, flat fee financial advisor or talk to your CPA to ask these tax questions. So there's your answer, Alyssa. But everything I've just said, you can probably throw away in the trash, because here's the real bottom line. If you are wealthy enough to retire early, you can always just buy health insurance without the subsidies. That's exactly what I do. In fact, when I go to healthcare.gov and I click buy insurance, I don't even bother filling out the subsidy stuff, because I just know for whatever reason, dividends, business interest, whatever it is, I'm going to have enough income. I'm not going to qualify, which is, obviously a very nice place to be in. But if you're, wealthy enough to retire, you can always rely on that. And you should really be budgeting for that. So you might say, hey, health insurance is going to cost me $1,200 a month, $1,500 a month, whatever it is. Plan on that, budget for it. When the year comes, if you can pull some tricks to minimize your income and qualify for a subsidy, cool. Maybe you'll pay $600 instead of $1,200. Great. But if you're relying on that, you're probably not in a position to retire early. And I think people get so freaked out about health insurance. And again, rightfully so, because this is America and health insurance is a mess. But the reality is it's just an expense. It's whatever it is, $1,200 a month. It's not cheap, but either is rent, either is transportation, either is food, either is travel, either is, education, whatever it is. It's just an expense you have to budget for. And once you do budget for it, get to the subsidies if you can. But if you're relying on that to retire early, you're probably not yet in a position to retire early. So it's an incredible question, Alyssa. It does get into some really interesting nuance, but it's one of these things I think it's kind of people getting, what's the saying, Jen? Like the forest for the trees.
Can't see the forest of the trees. Yeah.
Something like that. You're again so focused on this little minutia that the bottom line is you got to be able to afford health insurance without the subsidies if you want to retire early. And you can always do that.
Love it. Alyssa, great question. My fellow North Carolinian. Maybe you'll email me back after we've already recorded this and let me know where exactly you're from. It's like so exciting to see.
We'll post it as a Spotify comment.
I doubt that she's from Apex, North Carolina, the peak of good living. But if you are, that would be really incredible.
Are you from Apex?
Yeah, shout out.
I've never even heard of Apex. That is a cool city, though.
It's fantastic. It's great. There's nothing going on there, but it's my home. All right. Thanks, Alyssa. All right. Let's move on to Jeremy had time today.
We're in the comments. You're roasting me. And this is actually a pretty good roast. I like this one. It's not a good roast. It's a very, very consistent roast because not everyone says this. Half of people say this. So what is the post today?
Yeah, this post did very well. And I had, the comments are right for the pick, and I could have taken my pick this day. So one of the most recent PFC posts did very well. I think it's a really clever idea. Jeremy, you did such a good job on the post. But I also think that anytime people see Elon Musk's name, they just go crazy. So why don't you explain this post before we get into the comment section?
So it's a bar chart that goes from left to right, and it's a carousel. So you swipe through to see all the different images. And the way that Instagram is set up is that if you swipe, they're touching. And so you can kind of give it the illusion that's one very, very long image. And so in the first screen, you see, it says Elon's trillion. As of today's SpaceX IPO, Elon Musk is a trillionaire. Swipe to see how his wealth stacks up. And it goes through things like the median family net worth is $193,000, which is so small you can't see it. A millionaire has $1 million, so small you can't see it. A top 0.1% American, this is like the rich of the rich, not the 1%, the 0.1%, their net worth is $62 million. By the way, my net worth these days is somewhere under 8 million, like 7 point something. And so I'm not even I think I might be approaching the 1%, but I'm not even close to the 0.1%. But even the 0.1% at this scale is not even a pixel. So these like rich of the rich, someone 10 times richer than Rich Jeremy, who brags about his wealth on the podcast, is not even a pixel. And so then it shows like Taylor Swift, Oprah, Jordan, Donald Trump, the New York Knicks. Then are kind of like, now you can kind of see them, but then you start swiping and you swipe, and you swipe 20 times. You literally get tired. I make a joke about carpal tunnel syndrome and left swiping on Tinder. And after swiping 20 times at a scale where the rich of the rich isn't even a pixel, you get to see how big a trillion is. It's crazy. And so, yeah, as of this recording, I think Elon might have, SpaceX IPO obviously is all over the place, and his wealth is very volatile these days with the valuations of Tesla and SpaceX. But then, like half of people commented some variation of what, Jen?
Do people not understand that net worth isn't money in the bank or your pocket? It's your shares in your businesses. Elon has many extremely successful businesses, and he owns a lot of shares in his businesses because they are his businesses, his all caps.
Okay.
But shares aren't dollars in his pocket. And if he sold all his shares, the stock market would crash. So realistically, he has maybe 500 million max in the bank. People don't know how economics work. LOL.
La 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 la. And that got 220 likes. Because I don't know what it is, Jen, and I need to go into some sort of like, rant here about, but it's almost like a conspiracy theory rant. But I feel like it's a political thing, because I think like anyone on the right side of politics believes this to be true. They think Elon Musk doesn't have cash, can't get cash. Obviously he said 500 million, and that's nothing to sneeze at, but 500 million is, again, like not even a pixel on a scale, right? Or maybe 500 million is getting to be a pixel, I don't know, but it's very little compared to a trillion. It's like half of a thousandth of a trillion. So he's saying he only has half of a thousandth of what you're saying, not this trillion like you're talking about. And he's saying people don't know how economics work, la la la, and it's just, this talking point is so pervasive. And then I ask people, I say, well, what happened in 2022 when Elon Musk sold stock? And they'll say, oh, he doesn't sell, or he borrows, or, eventually when I ask this line of questioning, they eventually go silent, because the answer is that we know what happens if Elon Musk wants cash. Because he did it in 2022. And by the way, we talked about this way back in episode 6, but I think it's worth bringing up again because we've got new listeners, and this is just so pervasive. Until everyone stops with the stupid talking point, I think you have to like shout this out. So on April 26th, 2022, this was before SpaceX, this is their Tesla days, Elon Musk sold 109,000 shares of Tesla at about $904 a share to get $98 million in cash. That is cash in his checking account that he can spend, that day or as soon as the trade clears. And so you're saying, okay, well, 98 million, the guy's saying 500 million, that's about the same. But he wasn't done that day. A few minutes later, he sold 84,000 shares of Tesla stock for another $76 million. So now we're at $175 million or whatever it is. And that was two transactions, 175 million. Over the next 3 days, from April 26th, 27th, 28th, 2022. And by the way, this is just, you can Google Elon Musk stock trades. It's the first hit. It's very easy to look up how many shares of stock he sold. He made 214 such transactions. The starting share price was $904. The range was 822 to 922. Or sorry, 822 to 999. And so over these 3 days, as the market was fluctuating, it didn't plummet because Elon was selling. It just bounced around like it always does. His very first share sold was $904. His average share sold was $902. So the market didn't plummet. It basically stayed rock solid. It moved way less than 1% on average. Like, what is that, 0.25% or something? Like, that's as stable as a money market fund by, tech company standards, right? And over these 3 days, he didn't sell 100 million or 500 million. He got in cash in those 3 days, $8.5 billion of cash without moving the stock price. And so this commenter who said, people don't know how economics work, la, 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 la. Sorry, dude. Sorry, bro. It's definitely bro. You don't know how economics work, la, 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 la. This happened. It's a matter of public record.
That word?
He got it. That's how you say LOL. You say la 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 because he's laughing so loud. It's a funny joke. We're all over here rolling on the floor laughing at how Elon Musk has no cash. No, he got $8.5 billion in 3 days without moving the share price. And guess what? He wasn't done. That was in April. He sold more in August, 6.9 billion. November, 3.9 billion. December, 3.6 billion. Total, just for that year, $22.9 billion of the B. Like, we're approaching, that's a meaningful amount. That doesn't fit on the first page. We're like on the second page of the swipey thing now. Like, this is a real meaningful chunk of money. He could buy the New York Knicks twice with that. Jen, name the most expensive thing that you think someone could buy. What represents extraordinary wealth to you?
I'm trying to think of your chart. There was a jet. There was a Boeing on there. That's pretty expensive.
Yeah, the most expensive private jet that you can buy, if you buy like the decked out, what is it? It's the 747-8 VIP. The most expensive jet you can buy is $367 million. With $22 billion, you can buy, I'm going to do the math real quick. So $22 billion, you can buy 60 of those jets. So he could have bought 60 of the most expensive jet in the world with, at 60, like you can run an airline with 60 jets, right? And, same for the most expensive yacht. The most expensive yacht ever sold. We're not talking about a very nice yacht. We're talking about the most expensive yacht ever sold. It's called the Eclipse. It's a mega yacht. It's sold at $1.5 billion. It's 533 feet long. It has 2 helipads and a missile detection system. It's not like Elon could buy that. He could buy, 15 of them with just the cash he sold in 1 year without moving the stock price. So not only is this so much money, you could buy any worldly item, real estate, land, yachts, planes, any worldly item a person could possibly use or consume. It gets worse than that. You know what he used this money for? He bought Twitter. A tech giant. Like, the most valuable thing on earth is tech giants. He bought a different tech giant. I think he paid $40 billion for it. He put half of it was his cash down. Half of it was like loans and other investors or whatever, rich people do to fund these things. He could have paid all of it in cash if he wanted, I'm sure, because look how easy it was for him to get $23 billion. Why not $40 billion? And I think there's really no reason other than he doesn't want to keep selling things and paying tax on it. By the way, he did pay tax on this. Some people, when I bring this up, they're like, yeah, but he had to pay tax on that. I'm like, no shit. So do I. So does Jen. Oh, sorry. A mature warning now. I said the naughty word I had to. I got so worked up. Like, wait, so your argument is he should get $23 billion and not have to pay tax? Of course. And guess what? He's paying capital gains tax. He's not even paying income tax. He's paying a lower tax rate than people who work for a living because capital gains is lower. And so it just, this whole, and it drives me nuts because they're so wrong. He has maybe 500 million max in the bank. The stock market would crash. No, it wouldn't. It didn't. It doesn't. The stock market is very liquid, and he can, if he tried to sell $1 trillion of stock in one day, yeah, that would probably do weird things to the market, but he can sell as much as he wants to have any amount of money he wants to buy anything, including other tech giants, not to mention manipulating elections if he wants to, because he was writing $1 million checks like they're toilet paper during the last election, probably in violation of election laws. But that's this is America. This is where we live now. And so this whole thing, it's not wealth. It's just so insane. And by the way, when I say my net worth is, 7 million something today, in cash is very little of that. Right now I have a tax bill coming up, so I'm saving like 6 figures. I have like low 6 figures in cash. But normally I have like maybe 40 grand in cash, 50 grand, because I have my money in stocks, just like Elon does. And when someone clicks sell, they don't know if they're me, if they're Elon. We both want to be able to get our money back. Obviously his is a bigger scale, but we just proved it doesn't crash the stock market and push Tesla to zero, as it won't push SpaceX to zero. So yeah, this is like my least favorite insane talking point of these wannabe finance bros who think they know everything. And look at that, it has 220 likes. It's just crazy how wrong the internet is. Reddit thinks I didn't lose my teddy bear. Instagram thinks Elon Musk is cash poor. You're wrong, internet. You're wrong. You know who's right? The Personal Finance Club show, and all 3 of our listeners are the only ones who know it.
You got really heated.
I get worked up about this. And I'm not even an Elon Musk hater. There's, I think the world is nothing but shades of gray, and he's an interesting person that probably has good and bad things about him. But to make these crazy statements like he doesn't have cash is just where I draw. I'm like, no. We at least have to agree on reality, because that's not true. He can have as much cash as he wants. He can buy, 15 of the biggest yacht ever sold instantly, whenever he wants. That's true. It happened. So good for Elon.
Yeah, those are the 2 categories. It was like something like this, or it was somebody deciding on that you making this statement meant that he was bad, and that you had a side that you were picking, and then other people picking the other side. Those are like the 2 categories of comments I could have chosen from on this post.
Yeah. Actually, I forgot. There's another like kind of medium-sized influencer who was like trashing me in his stories, like very publicly saying, "Oh, Personal Finance Club never gives the other side of the story." I'm like, what other side of the story? Like, this is just a bar chart of his wealth. I'm not saying it's bad. I'm not saying it's good. I made, the fact that you think it's bad is probably says something about how embarrassing it is to you, not to me, to you. It's just a linear scale. And I'm not even proposing anything. I'm not saying we should take his wealth. I mean, if anything, probably capital gains should be taxed at a higher rate, because he shouldn't be paying a lower tax rate than people who work for their money. But, it's not even taking a position on if this is good or this is bad. I just think when people see the mind-boggling scale of it, you have to take a step back and be like, yo, like, what is going on in the world here? Is this okay? I think it's a conversation we need to have. And, again, not that we're going to take his wealth and we're going to take your guns. I think, maybe tax rates aren't fair because, maybe, whatever it is, we should, probably be fair. That's what I say. Anyway,
you got a lot of people's attention with that one, and, it went pretty big. So glad we got to dig in a little bit more today. And we have now made it to the end of our episode.
Thank you. Jen, are you still awake? I feel like this was just you got me going with baby Teddy at the beginning, and now we're just
I got you going. You were off to the races. No, this is a great episode. I hope people are going to get a lot from it. I enjoyed digging into these topics, and I can't wait to do it again.
Yeah, and we get into these nuances about Elon Musk and trading and health insurance and all these different things. But remember, it's all comes back to the 2 rules. If you want to build wealth, you just got to do 2 things. You got to follow the 2 rules of Personal Finance Club. Rule number 1, live below your means. And rule number 2, invest early and often. See you next week.
The Personal Finance Club show is produced by Jeremy Schneider and Jen Mundia. Music by Esabalu and Homie. Send your questions to podcast@personalfinanceclub.com. The Personal Finance Club show is co-hosted by Jeremy Schneider, who is a co-owner of Nectarine, an SEC-registered investment advisor. The views expressed on this show are those of the hosts and guests and do not necessarily reflect the views of Nectarine. Please refer to hellonectarine.com for all relevant disclosures. This podcast is for informational and educational purposes only and should not be construed as personalized investment advice or a solicitation to buy or sell any security. Listeners should consult their own financial, legal, or tax professionals for advice specific to their situation.